Have you noticed that homes are taking longer to sell? That there are more properties on the market, but fewer buyers? The global real estate market is going through a phenomenon called softening. It's not a price crash. It's something more subtle, but just as powerful. And understanding this can either save you or earn you thousands of dollars. So go ahead and hit the like button, subscribe to the channel, and share this video with anyone looking to buy or sell in 2025. Let's dive into what's really going on with the housing market. The softening of the market. The softening of the market is a clear sign of a shift in buyer and seller behavior. The term might sound gentle, but its impact is serious for those closely watching the industry. It means the market is losing momentum. Prices aren't crashing, but they're not rising strongly either. It's the start of transition, and those who recognize it can act more wisely. This phenomenon marks the beginning of a new cycle, where people in the market become more cautious. The overconfidence of previous years is giving way to more rational, strategic decisions. Those who see this shift early can stay ahead of the trends and avoid financial traps. Some of the key signs include homes taking longer to sell, an increase in listings and fewer active buyers. Instead of bidding wars, we're seeing longer negotiations and anxious sellers. This pattern is already visible in cities like Toronto, Austin, Lisbon, and Melbourne, markets that were overheated and are now showing signs of slowing down. These changes don't happen in isolation. They reflect the collective behavior of thousands of people reacting to economic, political, and financial shifts. So it's not just about statistics. It's a real change in how the market works on a day-to-day basis. Comparative data 2020 to 2025. To grasp the scale of what's happening, let's look at the numbers. In 2020, the average home price in the U.S. was about $329,000, with interest rates around 3.1%. That meant a monthly mortgage payment of just $1,123. Consider affordable for the middle class. Back then, wages were still keeping up with costs, and getting credit was easier. Home ownership was within reach for many families, especially with post-pandemic financial incentives in full swing. By 2023, prices had jumped to $492,000, and interest rates shot up to 6.81%. The result? A $2,570 monthly payment, more than double in just 3 years. Now, in 2025, the average price has dropped to $416,000, with rates at 6.84%, and monthly payments down to $2,183. It's still expensive, but 15% lower than the 2023 peak. That drop in monthly cost signals the start of a new cycle. This shows the market is beginning to adjust. We're not seeing a dramatic price crash, but it's clear that the era of explosive growth is over, at least for now. Factors affecting the market: falling demand. In 2025, the global economy is in a fragile state. Slow growth, shrinking GDPs, and trade tensions are directly impacting consumer confidence. When people worry about losing their jobs or see inflation eroding their income, they put big decisions, like buying a home, on hold. Uncertainty leads to inaction. Many people prefer to rent, even if it's a bit more expensive, just to keep liquidity and flexibility, instead of locking into a 30-year loan in an unstable environment. This directly affects the pace of real estate transactions. We see this pattern around the world. In Europe, buyers are waiting until after summer to assess the impact of upcoming elections. In the U.S., recession fears cause mortgage approvals to drop 18% in the first quarter. In countries like Brazil and South Africa, the strong dollar and rising local inflation have pushed up living costs, making it even harder to afford a home. And it's not just home prices. Rising costs for energy, food, and transportation are straining household budgets. The average American family now spends $312 a week on groceries, a 21% increase since 2022. That leaves less room to take on mortgage debt. Increasing supply. While buyers hesitate, more sellers are putting homes on the market. Some do it out of necessity. Others want to get ahead of possible price drops. The result? Real estate platforms are more crowded than ever. This leads to tough competition among sellers. More listings mean similar properties are fighting for attention from a shrinking pool of buyers, weakening sellers' negotiating power. Another trend is growing: foreclosures. Many people who bought homes between 2021 and 2023, often at peak prices, are now struggling to resell without a loss. If they've also lost income or can't refinance, the risk of default rises. In April 2025, over 39,000 foreclosures were reported in the U.S., the highest since 2017. That adds urgency to the market. Heavily indebted homeowners can't afford to wait for prices to rebound. They need to sell fast, even if that means settling for less than they'd hoped. Supply and demand balance. With more homes for sale and fewer buyers, prices naturally come under pressure. That doesn't always mean big, visible markdowns. Instead, a new negotiation dynamic is emerging. The 2025 buyer is more prepared, more demanding, and less willing to pay full asking price. This forces sellers to adjust their approach and creates unique opportunities for smart buyers. Instead of raising prices like in 2021, sellers are now offering incentives to close deals, covering closing costs, offering extended warranties, or making home upgrades to add value. A Zillow study showed that 44% of U.S. sellers in 2025 accepted offers up to 7% below their original asking price. That proves the pressure is real, even if list prices haven't officially dropped. These kinds of concessions reveal the true state of the market, a phase where buyers have the upper hand. The tide has turned, and recognizing that is key to making smart moves. Future scenarios. What happens next will depend on several macroeconomic factors. The market is at a turning point, and the months ahead will be critical in shaping its direction. Let's explore the three main forces that could influence prices, demand, and sales volume in the global real estate market. These scenarios aren't fixed forecasts. They're possibilities based on current trends. Those who keep an eye on these variables and prepare in advance will be better positioned to act, whether buying or selling. Interest rates. Rates remain high in 2025. The Federal Reserve is resisting calls for cuts, despite pressure from the White House and big market players. Why? To avoid reigniting inflation. But this also slows down the economy and the housing market. The longer high rates stay, the more the market cools. If cuts start later this year, even modest ones, optimism could return. That could spark renewed interest in financing. Even a symbolic rate cut could trigger a quick reaction. A drop to 4% would significantly lower monthly payments, making home loans affordable again for millions. That could be the spark for a new wave of property value increases. That's why many experts recommend closely watching the Fed and other central banks. Every statement is a clue to what's coming. Trade, tensions, and the economy. Ongoing tensions between the U.S., China, and the EU are fueling global instability. In 2025, many industries are still dealing with supply chain issues and cost inflation. This uncertainty makes investors hesitate and families avoid financial risks. Trade-sensitive economies like Canada and Germany are especially vulnerable. The impact is felt in real estate through lower investment, less confidence, and reduced liquidity. On the flip side, the July elections could bring change. If world leaders reach trade agreements and reduce tariffs, the ripple effect could benefit all sectors, including real estate. More confidence, more jobs, more willingness to buy. That kind of breakthrough could also release stalled investment funds. The market is watching closely. Government programs. Several countries are discussing initiatives to stimulate the housing market. Germany and Canada already have subsidy models for first-time buyers. In Chile and New Zealand, governments are exploring subsidized renovation loans. These programs help new buyers, especially younger ones, who've been hit hardest by rising prices, get into the market. But caution is needed. In some countries, like the U.S., these measures are still under debate. So their impact is limited for now, but could become a major game changer if approved in the coming months. Keep an eye on your country's news. These programs could be the difference between buying now or waiting another 2 years. Advice for buyers and sellers. For buyers, if you're thinking about buying, this would be one of the most favorable moments in the last decade. There are more properties available, less competition, and more room to negotiate. The chance to get a great deal hasn't been this high since 2014. The key is to be cautious. but not fearful. Analyze the listings carefully, know your budget, and explore your options. Strong, database negotiation is what separates smart buyers from regretful ones. But don't act on impulse. Run realistic simulations. Check the location, maintenance costs, and legal fees. Consider possible interest rate changes. And remember, real estate is a long-term investment. If the opportunity is good and you're financially stable, it might be worth making the move. Also think ahead. Choose something that makes sense today, and 10 years from now, emotional and financial stability comes from solid decisions. For sellers, if you're planning to sell, you'll need a strategy. The market is more selective and competitive, which means poorly presented, overpriced, or badly located properties are going to sit unsold. The best approach is to stand out. Think like a pro. Improve curb appeal, take quality photos, fix minor issues that might scare off buyers. Differentiate your property. Use good visuals, make smart improvements, and understand your buyer profile. It's better to sell quickly with a small discount than let the property sit for months while costs pile up. If needed, work with experienced agents to price it right. Remember, an unsold property costs money. Speed is now a competitive advantage. The global real estate market in 2025 is shifting gears. Growth has slowed, softening signs are clear, and the coming months will be decisive. If you're thinking about buying, do your homework, negotiate, and take advantage of increased inventory. If you're selling, adjust your expectations to match today's reality and be ready to compete. Watch interest rates, the economy, and the opportunities that arise in transition periods like this. And remember, your financial freedom journey starts now. Click the link in the video description to unlock the ebook packed with investing secrets, mindset shifts, and wealth building strategies.